So hello, everybody. It is great to be here. Great to be here today. And my name is Gary Fowler. I'm the CEO, founder, and president of GSD Venture Studios. And today we have an exciting event. Today we're going to talk about how to secure seed and pre-seed investment for your startup. So I'm a serial entrepreneur. I've been involved in 17 startups and several unicorns. I was on the original management team at ClickSoftware, which was sold to SalesForce for $1.35 billion, and also Yva.ai, an AI HR tech company that I co-founded with Dr. David Yang. We believe that intellectual capacity is evenly spread around the world, but opportunities are not. Today, GSD is in 57 countries around the world, as far away as Africa, Europe, Latin America, Canada, all over the US, including Silicon Valley. Our focus is on AI and generative AI. My own background is 26 years worth of artificial intelligence. And since 2016, I've been working in generative AI. Anyhow, with that, let's get started. Okay, can you move the slides, Diane?
I'm actually not sharing my screen. It's your screen.
Can you see my screen? Yeah. Okay.
Yeah. Yes.
Hold on. So the first part is I want to talk about, validating the ideas. I want to talk about developing projects. I want to talk about achieving your key milestones. So what is seed and pre-seed investment? What is the significance? So you get started in your company, you come up with an interesting idea. You need to look at minimal viable product. You need to go out and take that out to the market using your customer development to see if what you believe in is right and it works. If you look at it, there's a book called The Owner's Startup Manual by Bob Dorff and Steve Mike. I highly recommend that book. And in fact, today, if you want, Diane can send you over a book that I recently wrote for South Korean startups that'll be interesting for all of you about how to go global. So she can send that over to you. So anyhow, what is pre-seed? So pre-seed, seed level investment is some of the first money generally after you get your family and friends round. Sometimes they say family, friends, and fools, but that's how you get started with your company. Use your own money, use your friends' money and family's money to help get it going. The pre-seed money is really, at that point in time, you really don't have any solid valuations. You're looking at money, up to several $100,000 in general, less than 500,000 from my perspective. It changes all the time. But the idea is you want to be able to go out and test it. You want to go out and see if this product or service is really what somebody wants. Then you go to the seed level. Now, as you're going up the round, this is a seed, which is a pre-Series A round of funding. The seed running is just a little bit more money. I've done seed rounds, just FYI. So my seed rounds at Yva was up to $7 million. I did a 3 and 4. Generally, they're a lot less. Generally, they're less than $1.5 million or so. Gut feels $500,000 to $1.5 million. What is the significance? This is really the energy, the fuel for the ecosystem to get these companies started, to go out of the garage and turn something from an idea into a reality. So each one of you, start out going out with your family and friends, go out and then talk to more sophisticated investors. And who would that be like? Angels, super angels are really good, like the Bay Area angels in the US, the band of angels. You want those people. Who are they generally at the pre-seed and seed level? They're generally people that have had success, that are interested in early stage startups. Now, the one caveat is another place to go are the family offices and also VC funds that look at early stage companies. By the way, investing in early stage companies is still hot. Even though the market downturn, Series A investing is down about 70%. Earlier stage investing, seed and pre-seed, is actually up. So what do we want to do as we're preparing to invest? What kind of things do we want to look at? One is we need to make sure we have an incredible, enchanting pitch deck. It cannot have a lot of facts and a lot of figures. It must be enchanting. Can you put them all on mute, please, Diane?
Okay.
And then you need to identify who your target market is and what exactly is your value proposition. By that, I mean, what's going to make, by using your product or service, make it better for that company or that individual, whether it's a B2B or B2C. What is it? Now, how do you test that? As I said, you do your customer development. What does your customer development do? It validates the product or service you have. And how do you do it? You go out, you interview people. What I did on my side when we did Yva is we actually walked down the street in Palo Alto, California, and I took people off the street and interviewed them. And I talked to them. I sat down and I had a PowerPoint presentation that I had done up, and I had my iPhone and I recorded it. I said, what will you think about this? Why? Because one of the challenges that you make sometimes is you believe that there's a value proposition that may or may not be true. You want them to validate it. What does it mean, validate? It means when they get so excited that they want to grab the product or service out of your hands. You need to do the right kind of market research. Is what you're doing right? Is it a crowded field with a lot of players? Is it something that's at the beginning of the chasm that hasn't crossed yet? Is it a new market opportunity? You want to demonstrate that whatever that product is, that there's a big enough market to be able for you to be able to be supported, your company be able to support it. You need to build a really good, great team. I always look at hiring people that are a lot smarter than what I am. You want to make sure they have relevant skills and expertise, because in a sense, you're married to that team for the duration of the company. You want to make sure you get along. There's another rule. Do not have more than 3 founders of a company. Why? Because investors many times don't want to invest at over 3 founders, because they many times can't make decisions, because you have 2 and 2 that are fighting against each other in decisions. 3 is what is the magic number in terms of the max. You need one person that can operationally run the company. You need another person, and from my perspective, that's financially inclined. And the third person, you need somebody that knows how to do sales, marketing, and business development. Why? Because those are that's the true fuel of that company. Look at it, the rule of 3s. And I told you about developing a minimal viable product. Don't go out and over-engineer it and make it so complicated that nobody wants to buy it. Make sure it's interesting to people. It's not overdeveloped and you're not spending a lot of money, because the key is you need to get it to market to see if it's really something somebody wants. You may have to pivot to, as I did, we pivoted 3 times with Findo. We started out at Google-like search to your personal cloud. Then we went to a task assistant, and finally remote workforce management. Same tools, essentially. We pivoted as we did, we went down through with Findo. We found out that the people loved the solution, but they didn't remember their passwords. So we pivoted to a task assistant. As soon as we did that, Google came out, they bought X.AI. We understood that that wasn't going to work, and we moved over to remote workforce management. Your key is you got to have the flexibility enough that you're willing to change based on what the market conditions are. And by the way, they change very, very quickly sometimes. Next thing, how do you build relationships with investors? Well, you're doing a great job by coming here today, because these are the great places to meet investors and to learn about it. Go to industry events, go to startup meetings, talk to people, have business cards, have it set up with QR codes on your phones so that you can exchange information. Go meet with the people. Don't be shy. Don't be introverted. Go out and talk to them. Shake their hands. Tell them what you do. Have your little elevator pitch ready to go. I remember one time I was up in New York and I needed to get to the president of Walmart. And I saw the president of Walmart coming off the stage, and a lot of people wouldn't approach him, but I really needed his business. And I went right up to him and I said, David Glass, Gary Fowler. He said, do I know you? And I said, let me tell you a little bit about what we do. Anyhow, what happened is I developed a relationship with them, and they end up being one of our first customers. The key is it's the same kind of relationship building that each and every one of you need to do. Do your research, look at who's coming to that event, understand their background, and come up with common points where you can talk to them. So you can share ideas, talk to them. I had one time I met one of the investors, potential investors, loved sailing. So what did we talk about? 3/4 of our conversation was about sailing. And he finally said, I'm interested in investing in your company. Find where there's common points. Go out to the events, use LinkedIn, go to startup meetings so you can actually find those individuals that could be key for you. Use your network. The best thing to do is, I call it relationship asset management. By that, I mean, use your network of the contacts that you have to be able to do introductions to those investors in a friendly way. It's always nice to have a friend do the introduction. It dramatically increases the probability of success. The other thing is you need to research and identify investors who focus on seed and pre-seed. As I told you, go to angel groups, go to super angel groups, look for family offices that do pre-seed and seed, look for VCs that do seed and pre-seed. Do your due diligence in your work, because if not, you're just going to waste a whole lot of time. And the other thing is the pitching competitions that are out there, attend them. For you, on one side of it, allows you to go down through and dramatically increase your skill sets. On the other side, what it does is gives you exposure. It's things like the startup network are a good place to do it. Pitching competitions like Pegasus has on the Startup World Cup. Those are some of the places where you can get a lot of traction and a lot of interest. The pitch. So here's what you want to do with your pitch. So all of you out there, you want to be clear and concise. Do not put so many words on there on your pitch that it looks like you're actually creating a research document. I've seen a lot of people, particularly the ones that have technology degrees, come up and put way too much on there. Clearly communicate the problem and clearly talk about the solution. You need to talk about what the market opportunity is and growth. Why? Because if you're going to be somebody's going to be invested in your company, they want to understand how much their money is going to grow and what's the potential they're going to be able to get an exit. Why are you different? What are the competitive advantages that you have? Your product is ahead of the competition in terms of technology. Your team has proven experience. You've had exits. You've got the right product at the right place at the right time. Those kind of things. Look out, do a little bit of research. Like I said, Diane, if you can send them all a copy of my book on the one I wrote for the South Korean startups, that would be great.
Okay.
Then the other thing is highlight the key milestones achieved. What have you done? What are you going to do? For instance, if you got some incredible results in terms of the number of customers using your product or service, if you've gotten some stellar new accounts, if you have any type of significant event, you won some awards or even some startup competitions, highlight it. Talk about your revenue model and how you'll be able to monetize your company, how you're going to be able to make money. Talk about things like your financial forecast. What is real? Now, one of the challenges, sometimes people come up with 5-year models. Listen, the investors know you can't really forecast what's going to happen 6 months from now rather than 5 years. It really looks kind of foolish. At the very best, I would do a 3-year model and talk about exactly how you're going to use funds. One of the things they don't want to see is that the founders are paying themselves incredible salaries and they're not putting much money into the rest of the company. I've actually seen that happen before. Make sure you use a realistic financial forecast and funds that'll justify that forecast and being able to grow your business. These are the kind of things, each one of you, that I want you to have in the decks. I want you to talk about your traction and milestones, especially today. Tractions and milestones are incredibly important. I want you to talk about the market analysis and the target audience. What is your problem statement and what is your value proposition? We talked about the business model and monetization strategy, critically important to have it in there. What have you achieved? What are you going to achieve? Who's the team? Why they're important? Who are key personnel? For instance, if somebody's, if you're doing generative AI and they've been working in generative AI for 5 years, have worked with large companies or smaller companies that are notable, put them down. Put down the team if they've had exits, the CEO, COO, CFO, etc. Put down the kind of key successes that they've had. All this, what I want you to do is you want you to build credibility. And then the final thing is, don't forget the ask, and I've seen this happen a lot of times. Make sure you have your financial projections and how much money you need to raise. Now, my suggestion is you make this real, because sometimes people come in with what I call irrational exuberance. They're over the top in terms of their valuations. Make sure you use some methodology to be able to do that. I have written quite a few articles about it. You're welcome to check those out, but make sure that you have realistic expectations based on the current market today. Current market today is generally 4 to 8x earnings, or you go down through and there's some different approaches. You look at comparable companies that have grown and you come up with some valuations. It's hard if you don't have sales to come up the right kind of valuation, but you look at comparable companies and use that. And part of this, by the way, for each and every one of you is a leap of faith. In the beginning, when you're building a company, it's a leap of faith. So let's go down through it. I just talked about some of the people that some of the groups that could be interested in investing in your company. The angel investors are generally high net worth individuals, and they take their own money and invest their own money. So there's actually 2 categories of them: angel investors and super angels. Super angels are just a bit wealthier and they do a lot more investing. As we venture capital firms, well, who are they? They're professional investors that focus on startups, but you particularly want to look for the ones that write smaller checks and invest in early stage startups that have an appetite for them. And by the way, there are quite a few of them. We have GSD, our super scaler. I mean, we've had incredible success at GSD. We have 133 companies in our portfolio today from 57 countries around the world. I've been involved in startups myself, as I said, for over 30 years in Silicon Valley, 17 companies, several unicorns, including a NASDAQ IPO. Companies like ours, where we come in, by the way, we're an operational family office, which means that we like to guide those companies through the process and use our network and connections to give them more introductions. It's a little bit different model. We don't take 4 to 8% of a company in the front end. We charge. So it cost me $25,000 to put a company in for 15 weeks. I'll pay $15,500 of it. The company pays $9,500. We do it that way because we look at it as dating before you get married. We are potential investors. We deal with about 1,400 family offices and over 10,000 investors worldwide. And they know us because we've been in a long time, and they come to us for deal flow. Especially, folks, if you've got AI or generative AI companies, I mean, they come to us a lot because we're quite active. We've done 1,000 podcasts, written several books, have had exits. We're just known. So that's where we come in. But the other thing is, look for programs as ours is. We do the funding, mentorship, and advisors, and also other resources that they have to be able to help you grow your business. So in our case, our contact network worldwide. So on one side of it, the high net worth individuals are also potentials because they own companies that could be partners for your company. Look for those kind of folks. You know, I just had one company that was in the automotive industry, and we happened to know one of the top automotive families, made a phone call. That family not only was interested in the technology, but also wanted to invest in the company as a strategic investor. Look for those. Look for companies that can help you grow. Your key is to find the highest level people that can help you grow the fastest on a global basis. We use Silicon Valley as a port to the rest of the world. Government grants or programs, you know, many times when you're just getting started, many countries have all kinds of programs to be able to basically jumpstart you. Look for those in your region. There are crowdfunding platforms that you can get your company on to be able to raise money, all kinds of different ways to do it. So look for some of those. But make sure that the companies you do that with are legitimate companies, because the last thing you want to know is you go to the next funding round and you end up hearing from them that they're not interested because of the way you got your previous round. You know, so these are the steps. This is 101. So when you're going down to secure seed or pre-seed investment, they're going to ask for your deck. Make sure your deck is right. Don't make it like 20, 30 pages. Make sure it's clear. Guy Kawasaki wrote a book on it. It's called The Art of the Start. He talks about the key elements of a deck. Take a look at it. He does a really, really good job. In this initial screening and due diligence, they're going to look at your company. They're going to look at you. They're going to check you out, your LinkedIn profile. Make sure your LinkedIn profile is updated and it's got the right kind of information on it. So when they look at it, it doesn't, it's not senseless. Make sure it makes sense. Make sure even your Facebook profile is up to speed. And if there's any nefarious pictures, get them off, because a lot of people check. They just want to know who they're investing in. They're doing the research. They'll do either in-person or virtual meetings. Most of the investors I know today do a lot of virtual meetings, and they even invest virtually, although it's coming back a bit where they want to meet you on site, but still, you know, in-person or virtual pitch meetings. You got to go down through, look down through if you got questions or concerns. If they do give you a term sheet, make sure you hire a lawyer to go down through and help you to make sure you understand what you're buying in. Because for each one of you, those investors are going to be married to you for the next 7 years until you have an exit. You want to make sure that you get along, you're all on the same page, and you like each other. Sometimes companies will go out just to raise a round. They'll find people they're not really friendly with, and they'll have a problem. Make sure that you get down through and find people that you can develop a relationship with and understand and want to be around. And then the final thing is just close the round. How long does it take from the time you get started and raise the money to the time you close the round? Today, it's about anywhere from 4 or 5 months to 8 months. It's extended a couple of months. It used to be 4 to 6, 3 to 6, but it's extended a little bit based on the current financial climate. But let me tell you, this is, especially for all of you out there that are in generative AI companies or AI companies, this is the best time I've ever seen, because the multiples are going up. You add it in, and I don't mean in a light way. You really have a product or service that's going to make that dent using generative AI, using artificial intelligence. The valuations go up, especially if there's some kind of indications in your vertical market that and comparable companies that it's taken off. So take a look at that. So demonstrating your traction of proofs of concept. The importance of demonstrating your traction, proof of concept to attract is one of the ways to do it is show that you're acquiring early users, early customers or users, or you've got proof of concepts of people that are really interested, letters of intent. As I said, the pilots are important, the proof of concept pilots, strategic partnerships that could help you be able to grow your business exponentially are important. Names that have name brand recognition are really good to have. Show your revenue or your potential revenue growth that you forecast based on the market. If you've got feedback, customer testimonials, case studies, those kind of things are really important to have in there. It just is all supportive of that you're the right kind of company at the right place at the right time. And so testimonials, case studies, well, don't make these things like really long so that nobody wants to read them. Keep them short and sweet, a paragraph, something like that. And make sure that you have permission from the company to be able to use their name, because sometimes those investors will call the company and you don't want them to be blindsided where they're getting a call and they have zero idea when somebody's calling them. The terms and conditions, the considerations. So what kind of equity are they going to want from me? What kind of equity stake and what percentage of the ownership do they want? What are they going to value my startup? So there's one thing about raising money, but if the company comes in and says, oh, I'm going to give you $2 million for 50% of your company, it may not be a good deal. Make sure, because they're going to negotiate to get the best deal for them, that you base it on current parameters. So whether it's 20% or 10% of your company or whatever you come up with, make sure the valuation's in line. How much are they going to invest? When are they going to invest it? Sometimes they have funding milestones. I'll give you $1 million now, and if you ship so much of this, I'll give you another $1 million, or you get so many customers, and your MRR goes up this month. I'll get you a tranche, fund you, give you part of the funding. But make it abundantly clear, because the last thing you want is, I'm going to give you $1 million, but it's going to take you 9 months to be able to achieve it. Forget about it, right? And unless it makes sense for you. Look at ways that are mutually beneficial. The key for each and one of you is to make sure when you're talking to these companies that you're all on the same page and you're treating each other fairly. Because one of the things that's helped me an amazing amount is to do the right thing. And if you treat people fairly, the probability is that they'll treat you fairly also. One of the mistakes that a lot of companies make is they give up board slots. And what happens is the investors come in and they start controlling the board and making the decisions. Be very, very careful about board representation, and also what rights do the investors have and to being able to control the company. You want to make sure that you go through this in granular detail before you end up signing the term sheet and getting it back to them. Get a lawyer to look at it and make sure it makes sense. So that's what I have. What I can tell you, all of you, this is one of the greatest times I've ever seen for companies to get investment, especially, as I said, generative AI and AI companies. The pre-Series A money's flowing. We just had one of our companies that got a 40x valuation that's in AI. So from a top tier VC, so it's flowing, but you got to know how to get to those folks. You got to know how to talk to them. At GSD, through our super scaler, our whole idea is to take those diamonds in the rough, those companies, and to be able to turn them into unicorns. We look for companies and individuals that have those capabilities. We love it. As I said, we have 133 companies inside of GSD today. Within the next 2 weeks, we're going to start another cohort of GSD. So for all of you who are out there, if you're really serious at getting this stuff done, do it. The name of my company is GSD for a reason. It is Get Shit Done. For each one of you, it's not about the talk, it's about the action. Whatever you do in your lives, execute, get shit done. Don't talk, do it. My name's Gary Fowler, and I am the CEO, president, founder of GSD Get Shit Done Venture Studios.